What's going on, guys, and welcome back to another video, and welcome to your daily news report. Now, today we are specifically going to talk about President Biden's speech today regarding the banking collapses. We're also going to talk about the bank's bailout and whether or not this is going to raise taxes. So there's been a lot of questions on this. I want to address this really quick because this is something that I think we're all concerned about. If the United States government is going to bail out banks because of some of the practices that they have been going through over the past few years or really a while, well, what does this mean to the American people and specifically the American taxpayers? Well, we're going to get to that in today's video. All I ask is if you can spend just 2 seconds, go ahead, hit that like button for the YouTube algorithm, and let's begin. So first, let's talk about President Biden and what he said in his speech today. His speech was very short, and he did not answer a single question after his speech. He simply opened the door and walked out of the room. First, President Biden said that anybody that had money in the banks that end up closing will still have access to 100% of their funds. They will not get screwed. So that's good news there. So if you were a business customer, you just had any money in the bank, whether you had $10 million or you had $2, you will have access to 100% of your funds. And it should happen today. He also said that the American taxpayers will not be paying for this. He says this is going to come from the fees that are paid into FDIC. But then again, those fees are paid by the banking customers. So raising fees across other banks in order to pay this is essentially going to cost more to the American people. But again, he says taxpayers won't be paying for this. So him saying that, honestly, is complete nonsense. We will be paying for this. We will pay for a banking bailout. The money has to come from somewhere. He also said that the Treasury will backstop the banks, but in order to do this, the Treasury is assuming that the assets that they are assuming are worth what they're paying for, them. The truth is that they are likely not worth what they're paying for them. So even though it looks like we're getting fair value for these assets, we're not. And this is why some say this will contribute to the increase in our deficit moving forward. Again, I just want to be 100% transparent that I don't see how we can protect the banks, protect deposits without seeing our deficit go up or without spending more money now by charging the taxpayers. So it's a little bit of an issue. President Biden also goes on to say that investors will not be protected here, only banking customers. Obviously, that makes sense. He also said that the bank managers are going to get fired. Well, I certainly hope so. Why would we want somebody that, and again, this is tough because yes, you don't want anybody to lose their job, but if executives that were making these decisions all along and contributed to the collapse of the bank, if they stay on, well, that makes absolutely no sense. If they're the ones that caused the problems, then they should be the ones to go first. Now, one of the biggest things that President Biden said in his speech today is that all depositors across all banks will have access to their money, starting today. The goal behind this is to ensure that the American people don't rush to their local bank and try to pull money out. The U.S. government is essentially just trying to avoid a bank run. We saw this just last week, where there were talks and speculation of the Silicon Valley Bank. Then on Friday morning, customers went to the bank, tried to get money out, right? And they were told no. They were turned away. Okay? I actually got an email. I got an email. I'm not going to say what bank it is to protect the people that work there. But this person that sent it to me, I guess, works there at the bank. She said that in the email, she said that her manager was contemplating closing the bank just for today. Okay, they were thinking about closing the bank just for today. This was an email that was sent out late Friday afternoon, and they were thinking about closing the bank to ensure that people do not rush to the bank to pull money out and cause more mass panic. So that, my guess is, didn't happen because the government obviously stepped in. But that's something that we got to be well aware of. Here's something else you need to be well aware of. Even though the government is ensuring that the bank will not experience a bank run, this is also going to cause banks to act more recklessly. Because if you're saying that, no, we're not going to have bank run, you do not need to rush to the bank, pull money out, we are going to insure every single dollar that you have, right? This is going to cause banks to act more recklessly. We've seen it in the past. When banks get a little more room, or any institution gets a little more room, they're going to take it. They'll take as much as you're giving them. And if you give them a little more room, they're going to take a little extra room. So even though we're not going to see a bank run right now, according to experts, this doesn't mean we will not have bigger problems in the future. Now, I've seen a lot of people talking about the banking collapse, and for good reason, but I want to take it one step further. What are experts saying that we should do? Well, first, this is not financial advice. This is just what I am doing. And this is pretty much in line what financial experts are saying as well. I don't keep all my money in one bank. Okay, I have several different bank accounts, some checking, some savings, just a bunch of different accounts. Right? I have some in large banks, some smaller banks. Have many investment accounts. Hold gold, silver, crypto. Have other assets as well. I don't like my money being tied up in just one thing. Okay, if it's a bank account, what happens if it gets closed down? Right? Let's say you have $1 million and you have $50,000, or let's say $250,000 in 4 different accounts. Well, that's great because yes, FDIC goes up to $250,000, or it did. So what I'm saying is, and what many experts are telling us is, you need to be smarter with your money. Diversify it, spread it around. Okay? The other thing that I do is I make sure I pay down debt. Okay? I have no outside debt other than mortgages. The reason for this is because I don't want to, let's just say all the banks collapse, but my credit card company, or let's say I had an auto loan, now they're wanting their money. Well, what if I can't give it to them because my bank has locked me out? Well, if you don't have any debt, you don't have to worry about that. And then the last thing I do is I make sure I have things around the house, food, water, just emergency supplies, right? Also make sure you have some cash on hand, right? Simple things. It's not that difficult to do if you have a little bit of money. But the purpose behind what I am doing is I just stay diversified. I diversify any of my risk. Like I've said, and I've said this for quite some time, don't keep everything in one place. This is risky, especially in times like these. So, I just wanted to give you that quick little update because I know a lot of people are asking, what does this mean? Are we going to see more banks collapse? And the answer is yes, it's possible. But at the same time, will this raise taxes to the American people? As of right now, the answer is no. Will it raise fees to the American people? Most likely. And could we see additional taxes in the future in order to pay for this bailout? Possibly. But we won't know until that day comes. So again, thank you guys for watching. Have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.